The following is a paid program, and the views expressed on this show do not represent the views of WJZ-FM, Entercom Communications, its sponsors, or affiliates.
The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Hello, I'm Brian Akers, and welcome to Winning in Retirement. I have with me today a financial advisor from Akers Financial Group, Jeff Akers. Good morning, Jeff. How are you doing?
Good morning, Brian. I'm doing well. How are you doing?
I'm doing okay, sir. So you've been in the industry working with me for over 20 years. And what's wonderful is you received your CFP designation, which really helps you be, provide proper full-service financial planning advice. Our show today is going to be very special. We need you to pay attention because this show is important. This hour can improve your retirement years because we want you to win in retirement. This show is this. Will you win financially in 2021? Because this is winning in retirement. We want you to win financially in 2021. What are you going to do different this year than last year and the years before that? We will go through four things you need to be thinking about at the beginning of the year. We got 4 quarters of the show and 4 things to go through. So, Jeff, are you warmed up and ready to go with the Winning in Retirement show today?
That's right. We got to start strong and then stay strong to halftime and then work our way through the third quarter and finish strong in the fourth. So 4 topics, that should work out just fine.
All right, the hard part is we don't have a bench. There's no bench coming in for you, Jeff. I can't give you a water break except at the quarter breaks. That's it. All right, so we're doing this here. Will you win financially in 2021? What do you think, Jeff? Where should we start?
Well, let's start with kind of a basic thing. We need to be what we call cash flow positive. Do you have more money coming in income than you're spending, than what is going out? The American way for too many years has been spending more than the income would allow. And so it's important to check your budget. I know we don't like the B word, the budget word, but it's important to check and see how much is coming in and make sure that you're not spending more than that so that you can stay out of debt. We don't like debt. We don't like the D word.
You need to know where your money's going. No one else is going to ever care except for you. You need to know what money's coming in. That'd be your income and any source of income that's coming. And you need to know the outflow. You need to not fall into the trap of using lots and lots of debt to fulfill your monthly needs. You need to take a look at your finances wherever they are. Americans on average have more debt than they should. So what we're trying to do is make you above average, help you be financially fit for your finances. Now, we've all had good intentions the last few years, and those good intentions, some people call them resolutions, I call them thoughts, You think about something, I want to be better off financially. And then what happens is this, they don't do anything about it. So the basics of this is know your budget. Where's your money going? Write it down. Look at all the accounts. Where's this money flying out the door? Know where it's going so that you can figure out if you are cash flow positive or not. If you don't know if you're cash flow positive or not, you got to start right there.
That's right. And Brian, I know you've been doing this for a really long time, over 30 years now. And you told me a story about a client one time. He had a great income, lots of money coming in. And you sat down to talk to them about investing and saving for retirement and everything. And every time you met, it was like, well, I don't have enough for this and I don't have enough for this. And so you had to kind of dig in and check where is the money flying out the door, like you said. So even if your income is really high, sometimes the money is just going out faster than it's coming in. And so you've got to find a way to get that under control and save for your future so that you can have a positive future and win in retirement.
One of the fundamental mistakes is if I make more money, I'll be in better shape. The problem is that if you're a spender at low numbers, you're a spender at high numbers. Many people, as they make more and more money, the money came quick to them or they've earned it and it comes in fast and they spend it fast. And they believe that income will last forever. That could be as a result of stock market trading, where they hit a few home runs, especially in 2020, and made some good money on their stocks. I think they're always going to do that. So people fall into that trap of believing that stocks are going to rise forever. They think their income's always going to rise forever. They don't have the fundamentals that they need. We need to go from being a spender to being a saver. That is the key ingredient that we're talking about here in the first quarter, is to be cash flow positive, is to become a saver, one that sets money aside for the goals they have for their life and for their family. That has to be done. So what are you going to do differently in 2021? Become a saver.
And you've talked about, if you've got a lot of income, you might spend a lot of money if you're a spender. We've got some clients who never earned a whole lot of money, but they are great savers, and they were winning in retirement just because of their habits. And that's kind of a key, is developing a good habit, a habit of saving rather than a habit of spending, and setting some money aside. And you've reminded me of there's a verse in the Bible that talks about if you're faithful with little, you'll be faithful with much. And that's what Brian's talking about with the idea of if you have a small income and you can save some, then when you have a large income, you'll save some. But if you spend it all when you have a small income, you're going to spend it all even if you have a large income. So don't fall into the trap of, if I just make some more money, if I can just earn more money, then I'll be fine. What'll happen is you'll earn more money, but you'll be deeper in debt. And when it comes to debt, we want that to get paid off. We talk about unsecured debt, things like credit cards in particular. They're just a drain on your monthly finances. And so you want to make sure that that debt is paid off. Now, mortgage is a debt. The mortgage for your house is a debt, but it is a lower priority to pay off because you do have to have a place to live. But be sensible about what kind of place you own and what kind of mortgage you have. Make sure that it's something that you can truly, truly afford. Interest rates are really low right now. And so, that's a wonderful thing if you've got a mortgage. But I remember years ago sitting down and talking with folks, they were getting these loans. This was probably 10, 15 years ago. They were getting loans that were interest only, and the interest rates were really low, and so they bought more than what they could afford. And it's going to become an issue. So be careful about even what kind of mortgage you have, but it's important to pay off that debt, particularly the credit card debt. Get rid of that and just live as you go. Make sure that your budget is cash flow positive going forward.
One of the best investments you can make is to pay off a debt. Imagine that in the bank, they offer you an amazing 0.2 of 1% as interest rate. And then you might have a debt. It might be mortgage at 2 to 3%, could be home equity at 3 to 5%. It could be a credit card at 7 to 27, 29%, depending on your credit rating. There are personal loans, student loans, all kinds of debt out there. One of the best investments that you can do is to pay off the debt, because you're saving yourself that interest that's going out the door. When you do your budget, what you got to do is you put in credit card, but you might want to divide it into principal and interest so that you can see how much interest is in your budget. The interest that's going out the door for money that you're borrowing just to maintain life. Credit cards are very, very convenient. They're being used everywhere. People are requesting them rather than cash. And what happens is we charge. It's very easy to spend. And what happens is that bill comes, you pay part of it, not all of it, and then that begins that debt, that process of debt accumulating in your life. And many times that debt will come very, very fast onto you. It might be some bad event, loss of a job, medical, you might have a car accident. There's all kinds of things that kickstart this. But sometimes it's just a simple habit of needing things or wanting things now, that instead of saving for it, you go ahead and buy it and pay it off down the road. So you end up paying a whole lot more for it because of the interest and credit on the credit cards that you're charging.
Yeah, one thing that you can do when it comes to your car, I got this advice a long time ago from a cousin of mine who's actually here on the radio this morning. He said, when you get a car, you've got a car payment. When you get the car paid off and you still have the car, keep making the car payment to your savings account so that the next car, you don't have to borrow as much. It's a simple thing. It just remains cash flow neutral. You just have to keep the car longer than the loan that you had on the car. And just the basics for today, no matter what the sport, coaches try to drill into their players good habits. And so what we're talking about today is good habits, developing good habits. If you have good habits in basketball or football, we've got the playoffs coming up, then you're going to be more successful in the game. You're going to be more likely to win. And so we want to set you up for success, set you up to win in retirement by developing good habits. And so the good habit we've been talking about right now is positive cash flow, paying off that bad debt. Like Brian said, you're paying 20-some% on a credit card and your money in the bank is earning 0.02. It's just a bad trade-off if you're keeping money in the bank rather than paying off that credit card. So we want to get that debt gone, and we want to make sure that you are cash flow positive. For this section, just keep that in your mind. Cash flow positive. Am I cash flow positive? And how can I get there?
So what are you going to do different this year that will make you win financially? You need to do something that's different this year rather than what you did last year and the year before. We keep doing the same thing, we're going to get the same results. This show, we're going to cover 4 different things that help you with finding ways to make your financial life better. So what we covered here first is being cash flow positive. Cash flow positive is a thing that takes work, and you got to monitor it all the time, not just once a year. Keep doing it. So this show is very important is this. Where are you now? What kind of financial person are you? Are you a person that is going to get your finances under control? Let's make that a priority for what you're doing. Because maybe you've always been in that defensive mode this last year, especially in 2020. Defensive maybe in every way. Like you're sitting on a sofa, where you lean back and the sofa sucks you in. What you need to do is to stop. You can't keep moving back and back and back, reacting. Reacting has to have the energy. Defense, the energy that's coming from leaning back and being defensive is negative. What you want to do is be creating. You want to sit forward. You want to have that forward-moving energy of creating. People who will get all the way through this and get their finances in order to be in the best shape are the ones that will take advantage of opportunities that are there. This is the time to be in the creating mode, in the solution mode. It's a choice. We want you to win in retirement by taking this opportunity to begin planning with Akers Financial Group. To schedule your free meeting, give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave us a voice message, and Susan will call you back on Monday to schedule a phone meeting, virtual Zoom, or an in-person meeting with one of our team of advisors. Start planning for your retirement now. Call 833-946-7384 or visit AkersFinancialGroup.com. Hindsight investing is always 2020, but for real 2021 investing, what should you do? We'll talk about it when we come back.
Akers Financial Group was founded on the principles of integrity, trust, and service. We believe each and every client is unique and deserves advice and implementations that apply directly towards their personal financial fingerprint. This financial fingerprint tells us the objective risk tolerance and purpose of the investment and insurance tools that we use to assist our clients in reaching their goals. By discovering the purpose of each financial decision, we can help you accomplish your goals. Intelligent financial design starts with a detailed balance sheet and cash flow to know where to start. This leads to a financial decision that will allow you to reach your goals with your risk tolerance in mind. Our relationships begin with an initial consultation and grows with each meeting. We would be thrilled to work with you and begin your planning process. Call us at 833-WIN-RETIRE. That's 833-946-7384. Or visit our website at AkersFinancial.com. Member FINRA SIPC.
Are there times in some games you wish you could just turn on the TV at the 2-minute warning? Because that's the most important part of the game, right? As a fan, these are the most exciting moments. Your team could take home the victory or crumble under pressure. But when it comes to your retirement, don't wait until the last 2 minutes. So much can happen in the final working years before retirement. Whether you're in your 50s or 60s, near or already in retirement, there's still time to put a plan in place. Don't wait until right before you retire to begin planning for your future. Can you win the retirement game like that? Come in and talk with the team at Akers Financial Group. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Yes, this is Winning in Retirement. I'm Brian Akers. Here with me today is Jeff Akers, Vice President and Certified Financial Planner Practitioner at Akers Financial Group. Today, we're doing a few different talks. Today, we're talking about mainly this. Will you win financially in 2021? Because this show is Winning in Retirement, we want you to win financially in 2021. What are you doing, or what are you going to do different this year than last year and the years before that? We will go through 4 things you need to be thinking about at the beginning of this year. We have 4 quarters. The first quarter we covered being cash flow positive. Now we're here in the second quarter, and we need you to just pay attention and stay alive and stay going forward when it comes to these topics. The second period, I had the question of this, Jeff. Hindsight investing is always 2020. But for real 2021 investing, what should you do? What do you think about investing in 2021, Jeff?
Well, investing in 2021 is going to be different than in 2020, that's for sure. But one thing that we need to do is stay diversified. Something that happened in 2020 was technology stocks really went through the roof. And so a lot of folks right now are over-concentrated in technology stocks. They have a lot of growth, a lot of technology, and they don't have things like international or value or other types of investments. So it's important to stay diversified in your investing. And if we knew at the beginning of 2020 what was going to happen during the year of 2020, besides probably electing to skip it, we would have chosen certain investments that did really well last year. But those investments won't necessarily do really well in 2021. So instead of looking back at what did great, we need to look forward at what we think will do better, and we need to stay diversified and have the right allocation to do that.
All right, so let's go with basics. It's very easy to go backwards and look and say, oh, I should have, would have, could have bought these certain stocks. And then you want to buy them at all-time highs. And the answer in fundamental, basic, conservative financial planning is not to buy at the highs. That doesn't mean all stocks are at their all-time highs and won't keep going, but you need to look at where you are. When we use the word asset allocation, what we're trying to say is this. With your investments, and we look at each and every one of them, and we bring them all together, you need to have a portfolio built about percentages in certain asset classes. An asset class can be things such as large company stocks that are designed for growth, designed for value. Could be medium-sized companies and even small companies. Now, in the stock market, a small company is about $2 billion and lower, so it's not really that small. It's not like a local small business, but it is small compared to a $1 trillion company, and there's a couple of them out there now. But diversification also means bonds. It means non-market assets like real estate, gold, silver. There's something called Bitcoin out there, I've heard. There's just a lot of investment pieces, and you need to look at your asset allocation. Our advice is this, that if your asset allocation is wrong, no matter what the market's doing, you need to fix it. That means if you have all cash and your asset portfolio, asset allocation is wrong, you need to have something in stocks. You need to start buying stocks. You need to start buying and diversifying. We should not all chase the winners of last week. We got to look and diversify. The second thing we got to do is this. If you have too much stocks, you got to take some winning off the table and fix your finances. Build your asset allocation. What is your basic advice with asset allocation, Jeff?
So for asset allocation, we've got, like you said, percentages in different areas, but we want to have a certain amount of money that's protected, something that has guarantees. So cash in the bank, you've got the FDIC guarantees that. You can have CDs. You can also have things called fixed annuities and fixed indexed annuities that have some sort of guarantee. And as we get into retirement, we need to have some things that have guarantees. The market, it might be great for a while. Last year was a pretty good year for some of the market anyway. And there are going to be great years like that. But there are also some down years, some negative times. If you remember how you felt in March, especially the end of March, those kinds of times happen. And so it's important to have some money that is set aside, that is protected. And if you need income from your portfolio, you don't want to be forced to sell at a loss. And a loss, like what was happening in March, you don't want to be forced to sell your stocks while they're down. Whatever you had to sell to take income, you missed out on the rebound as it came back up. So have some money set aside in cash. Brian mentioned, maybe you've got all your money in stocks. Well, like you said, trim some of that off. Make sure you've got some protected assets that you can use if you need it, and get the allocation fixed going forward. It doesn't matter where you think the market is. You got to make sure that you have the right allocation in order to be successful and to win in retirement.
All right, so asset allocation is a fundamental start to your investment portfolio. The other way of starting is you have to begin by investing and saving. Some of that is through your work. If your work offers a retirement plan, you must begin participating the very first moment you start working. If you are not participating in your company 401k plan, TSP, 403b, 457, whatever the name of it is, if you're not participating, that should be the first thing you do right now. You have not done it in the past, you need to do it now. How do we make our finances better? Is we got to start saving. Saving first, before you get that paycheck home, make that money go into an investment that's for your future. You need to take money and throw it into your future. If you do not throw it there, no one else is going to. We're not sure what Social Security is going to look like. We know very few companies will ever have a pension. The only way to ever retire is to be able to set money aside to your future. You need to maximize any employer match. If you're not maximizing the match, so if they match 3% dollar for dollar, you should put 3% minimum in. We'd rather see you put 10% of your pay away. If you do 10% of your pay from day one, you're going to be able to retire early or on time and have a great financial future. Financial planning and your investing has to begin with savings, putting money away. We love Roth IRAs. We love Roth 401ks. That's where you pay tax now, never again. Do that. Do a Roth 401k. If you put that money, pay tax now, we think you're in great shape because tax rates are so low. We do believe rates are going to be going up over the near term. We don't know exactly when, but we do know they're going to go up. You might as well pay tax now, once and never again, like the Roth IRA provides. So investing means savings. Jeff, what are your thoughts?
Yeah, so in the first quarter, we talked about being cash flow positive. One of the benefits of being cash flow positive is it's easier to set money aside and to save to the future. The employer plans, like Brian talked about, maximize that match. Get as much free money from the company. Give yourself a raise by saving some money. Set aside whatever it takes to get as much free money, that match, as you can. And then the Roth IRA, like Brian was talking about, is fantastic. So there's diversification when it comes to types of savings, IRA, Roth IRA, 401k, even non-qualified types of investments. And there's diversification when it comes to what is owned inside those investments, whether it's stocks, mutual funds, cash, fixed types of assets, those kinds of things. So it's important to have all those things in place and develop a plan. And that's what we do, is have a plan for how much to save, where to save it, and what the benefit will be down the road. Because like with the Roth IRA, Brian said, it's free, tax-free in retirement when you take money out of a Roth IRA. And that is a great thing. We like that a lot. So get as much match as you can, and then get as much money into that tax-free bucket as you can, which is the Roth side of things. Those are some important things when it comes to investing in 2021 and beyond.
Some basics is to know your stock market history. If you go back to the late 90s, it feels a lot like that on certain stocks, where you bought stocks because they were moving and you didn't look at their finances. You didn't look at their valuation. You didn't look at their earnings. You just sort of bought momentum stocks in the late 90s. It was just at the turn of 2000 through 2002 that the NASDAQ experienced an 85% drop. That took over 12 years for the NASDAQ to come back to where it was back in 1999. Know your stock market history and the chasing of returns of certain stocks and things, and how quickly money can disappear on the downside. What you'll find is that growth happens slowly, losses happen very quickly on stocks. So if you have winning on the table, it's not a bad idea to look at your stock portfolio and say, oh, let me take some of that winning and let me pay off my debt. Let's move and diversify. Let's rebalance your asset allocation to where you have some lower risk to be able to be there, to be the money that you can count on the guaranteed side. So building your portfolio is a very good thing to the future. When we look at the future, we must understand where we've been and where we want to be going. So understanding your finances has everything to do with knowing where your money is now and investing it, and also knowing where you're investing it, so you then build a portfolio and have it for the long haul. Make sure you're doing your proper asset allocation.
Yes, and get educated about how returns affect investments. Everybody likes to see the big return percentages, but how does that affect your actual money? And that's one of the things we can explain with you when we sit down and talk with you about diversifying and being properly allocated with your investments.
All right, so today what we're talking about is will you win financially in 2021? Because this is Winning in Retirement Radio Show, and we want you to win financially. To be able to do that, you need to do things differently this year than you did last. You need to make sure you're doing the right things. We've covered cash flow positive in the first segment. Second segment is to understand investing, and that investing means savings. Akers Financial is a local independent firm. We don't report to a big company on Wall Street. We report to you. We have offices in Forest Hill, Maryland and Lutherville, Maryland, and this is all about retirement, not about us. We begin winning in retirement when you begin winning in retirement. How does Akers Financial Group work? What we do is we schedule free meetings. We ask you to give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. That free meeting is a get-to-know-each-other meeting. That can be done over the phone, a virtual Zoom, or we're doing some in-person meetings. What you need to do now is to go ahead and start your retirement planning by give us a call at 833-946-7384 or visit AkersFinancialGroup.com. Coming up in the third quarter of the show is make sure you have the insurance your family will need now. Don't wait. We'll explain in a moment.
Akers Financial Group was founded on the principles of integrity, trust, and service. We believe each and every client is unique and deserves advice and implementations that apply directly towards their personal financial fingerprint. This financial fingerprint tells us the objective risk tolerance and purpose of the investment and insurance tools that we use to assist our clients in reaching their goals. By discovering the purpose of each financial decision, we can help you accomplish your goals. Intelligent financial design starts with a detailed balance sheet and cash flow to know where to start. This leads to a financial decision that will allow you to reach your goals with your risk tolerance in mind. Our relationships begin with an initial consultation and grows with each meeting. We would be thrilled to work with you and begin your planning process. Call us at 833-WIN-RETIRE. That's 833-946-7384. Or visit our website at AkersFinancial.com. Member FINRA SIPC.
The choice of your child's school is vitally important. Wouldn't you go a few more miles for something really special? I'm Brian Wilson, principal of Harford Christian School. Harford Christian is an independent school in northern Harford County, serving students in preschool through 12th grade. Our Uncommon Core makes all the difference. For nearly 50 years, we've partnered with parents in the important responsibility of training children in God's truth. Our biblical worldview stands in stark contrast against today's culture. At HCS, political correctness is never prioritized above God's unchanging truth. We hold the bar high as we prepare students to serve God's kingdom, not just the workplace of man. Affordable tuition and transportation options put the choice of Christian education within your reach.
Come visit the longest established Christian school in Harford County. You can become acquainted with us through a private tour or on the web at harfordchristian.org.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers from Akers Financial Group. Here with me today is Jeff Akers. We're both certified financial planner practitioners at Akers Financial Group. And we are awake and ready to talk about finances today. Of course, we're getting ready for the playoff weekend. The Ravens are in the playoff again. And so we love the word winning, and that's what the show is about, winning in retirement. So we said earlier that coming up in the third quarter of the show, we want to make sure you have the insurance your family will need now. Don't wait. So this is a very important topic, and we need you to just pay attention to this quarter as we talk about certain insurances that you need to have now.
Insurance is about protecting things. In the first quarter, we talked about cash flow positive. Second quarter, we talked about investing. And you can do those things, but then something bad could happen. And whatever that bad thing is could turn that cash flow from being positive to being negative. It could take your investments and sap them, draw them down. So you want to have insurance in place to protect your financial future so that you can win in retirement. Now, insurance is something that people don't like to talk about because it is there to protect against the bad things, and we just don't like to think about the bad things that may happen. But it's important, and it's important to get it straight. If you sit down and do it, just get it done and out of the way, then you don't have to think about it for a while if you've got it done right. So this quarter, we want to encourage you, implore you to get your financial house in order with insurance so that your financial future can be protected.
All right, you're using the word insurance. You're chucking that word out there. Insurance is a lot of different things. So we need to define the insurance you're talking about. So let me ask you this, Jeff. What is the first insurance to talk about?
Oh, what's the first to talk about? That's tricky. I'm going to just talk about life insurance first. It's not necessarily the most important.
No,
but
that's not number one. That's not number one.
He doesn't want life insurance number one. Nobody likes to think about dying, though, so that's the one that people like to put off.
No, I guess I was playing a game with you about what do you think is if you had to buy insurance, what is the one that you have to have? What do you think?
Oh, for that you have to have health insurance. That's the law. You must have it. If you have a car, you have to have car insurance. Those are ones that are mandated by law.
Yeah, I'm not going by mandate. I'm going by, what do you think, Jeff? What the insurance? I think health insurance is right. I think that's something you need to have to protect yourself from major debt on a major catastrophe. Many bankruptcies are created because people don't have health insurance at all. And that's something that the government mandate was trying to stop that. And so I think things will change where that mandate comes fully back. But I think generally health insurance is something that is a huge priority. So when the word insurance comes across my mind, I do think health insurance first. I do think life insurance and financial planning is always something people don't cover properly when they first come in, right, Jeff?
Right, life insurance, and the other one they don't cover is disability insurance. But when we're talking about these insurances, I think in terms of what will you lose if something goes wrong? So we all need to have car insurance. If something goes wrong and you didn't have car insurance, besides getting in trouble with the law, you're going to lose the car, and you could lose other things. You could lose money, investments. You could lose, conceivably, even your house. Which brings us to homeowners insurance. If you don't have homeowners insurance and proper liability coverage, again, you can lose the house, you can lose other assets, your investments. If you don't have health insurance and you have to file for bankruptcy like Brian was talking about, then you can lose your assets as well. But if you don't have life insurance, your family is the one that's going to lose everything if you're not properly covered with life insurance. So I think that having life insurance, having the proper amount of life insurance, is one of the more loving things that you can do for your family. It's one of the things you can do to protect them when you're not there. And so I believe that life insurance is a must for folks to make sure that's covered, because if you are the primary breadwinner in your household and you pass away, your family loses that income. So what are they going to do? Where are they going to live? Are they going to be able to pay off the debts that you might have accumulated? We talked about cash flow positive. They might have been cash flow positive as long as you had that income from you working, but now you're not there to provide that income, and the cash flow could turn negative really quickly. So I still think that life insurance is one of the more, maybe second to health insurance, I can go with you there, but life insurance is one of the more important things to have in place to protect your family when you're not there to do anything to help them after that.
Yeah, I wasn't trying to win, even though winning in retirement, we like to win. What I was trying to get
You're always
across
trying to win.
is that, yeah, I agree with that. But generally, when you think of the word insurance, many times people think of it as an insurance bill. They think of insurance, something they have to buy, something they're required to have. What we want you to think about is insuring. What are you insuring? If you're insuring you and your family, you're insuring their future when you're not there. You're insuring your money. You're insuring this. That's what you're trading money for. You're taking money from your budget and you're giving it to an insurance company for their guarantee on a certain item. That could be if you passed away that they'll pay. We would like you to consider reviewing your life insurance. What you do is you give us a call at 833-946-7384. We look at the life insurance you have, what you're paying, how much you have, and we figure out how much do you need on the life insurance, and we make sure you buy the right kind of insurance that fits the need that you have. And you need to do it now. When you're healthy and things are going well, it's the day that you need to buy the life insurance. We don't know our future. We don't know how long we're going to live. We don't know what changes on our health in the future when we won't be able to buy it. I can tell you people I grew up with, 2 or 3 of them were permanently disabled before they were 45 years old. There's people that I know that passed away in their late 40s, early 50s. It's sudden. People pass away at all kinds of different ages, and none of us really know that's going to happen. We just need to plan financially. If something would happen to you, what would your family do? Will there be money to pay the bills? Sometimes they say take 10 times your income. It all depends on how old you are and how much savings you have. If you're not financially independent, you need life insurance. If you want to look at life insurance for other reasons, there is lots of reasons on life insurance. But the basic core need that we recommend is you need to buy insurance, and you need to do it now. On the health insurance side, now, Jeff, on the health insurance side, people have options and choices right now, and then in the near future, choices might get narrowed down a little bit more. But generally, people can get insurance if they need it. Isn't that a fair statement?
Yes, it is. Health insurance, if you're over 65, you get Medicare. But even for under 65, there's the government plan. If your employer doesn't offer health insurance, or if you're not employed, so you don't have access to health insurance through an employer, then during open enrollment, you can get insurance, health insurance, through, in Maryland, it's the Maryland Health Connection. Now, open enrollment was back in November. That insurance started January 1st. So if you missed that and you don't have a qualifying event, we might have to do some other things to get what we call a non-ACA qualified plan, but you can get some kind of protection. And it is important to have some sort of protection for your health, because you don't know what's going to happen. You don't know if you're going to need doctors or prescriptions or hospitalization. That's the one that usually gets folks. So there are ways to get covered with health insurance. So there's really not an excuse to not have it now. You need to make sure that you're covered with that. Now, I wanted to go back to one other thing you mentioned, Brian, and that was folks that you know that are disabled. And disability is one of the, if not the, type of insurance that people just overlook. They don't think about it. But if you're working and you have an income and then something happens, whatever that is, and now you can't work and you don't have that income, then disability insurance is there to protect you, protect your assets, protect your family and your future. So disability insurance, if it's offered through your employer, definitely look into getting it the next opportunity that you have to sign up for it. If it's not offered through your employer, you can get individual disability insurance. So be checking on that. And I can't emphasize enough that the insurances, all of these insurances are there to protect your financial future. When I think of insurance, I think of protection. And disability is something that protects your earning potential if you're not able to work and earn money anymore.
Many people need to also review their auto, their home, and their umbrella insurance. And what we recommend you do is you call your agent that provides that. You call the company that provides it and have them review your coverages to see if you're properly covered. Things change. Our cars get older. They get over 10 years old. We have money in savings, which then allows us to have higher deductibles. Lots of things change. Typically in financial planning, we want you to have more liability coverage than normal, usually at least $500,000, or an umbrella policy of $1 million. You should talk to your auto and home insurance agent about having an umbrella policy and bringing it all together. This is all part of the insurance proper planning.
That's right. Sorry, you caught me off guard there, but insurance is critical. So make sure that you get the insurance coverage that you need.
Insurance need is what financial planning does. As we talk about where you are, what your financial fingerprint looks like. That's where you are right now. Then we review the current coverages you have to see how it plays into your financial plan. And then we get them all set up. Getting that set up is building a foundation to the future. We want to have proper amount of insurance and not to be overinsured. This is all about building your best retirement plan. Because we all know in retirement, it's all about getting your time back. You decide how to use it. Before retirement, your time was all tied up with other commitments, mainly your job, all kinds of things going on. So a lot of that goes away when you retire. Your time is now consumed by things you want to do. To begin winning in retirement, give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call and leave a voice message, Susan will call you back on Monday to schedule a phone meeting, a virtual Zoom, or even an in-person meeting with one of our team of advisors. Start planning your retirement now. Call 833-946-7384 or visit AkersFinancialGroup.com. In the fourth quarter, we're going to go goodwill hunting. We'll talk about that in a moment.
Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678-356 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678-356 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services.
You are unique. Just as no two fingerprints are alike, each individual's financial situation is uniquely their own. That's why the Akers Financial Group's team of advisors begins each relationship with a proven process that identifies your financial fingerprint. We'll guide you through a series of steps designed to provide a complete and accurate snapshot of where you are right now. Everything we learn about your financial fingerprint will become part of a detailed financial plan created especially for you. We'll never give you a cookie-cutter proposal or suggest a one-size-fits-all portfolio. The financial plan takes you from where you are now to where you need to be. Begin by discovering your financial fingerprint right now by going to getmyfinancialfingerprint.com. That's getmyfinancialfingerprint.com.
Member FINRA SIPC. You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers. Here with me today is Jeff Akers. We're both certified financial planner practitioners from Akers Financial Group. We're financial advisors working with clients for many years. I've been working in financial services since 1987, and Jeff started about over 20 years ago. Today we've been talking about a really important topic, and that is this: will you win financially in 2021? Because this show is Winning in Retirement. We want you to win financially in 2021. What are you going to do different this year than you did last year and the years before that? We will go through 4 things you need to be doing and thinking about at the beginning of this year. We have 4 quarters, but guess what? We are here in the 4th quarter already. For those that have been with us the whole show, you've noticed that we've gone through cash flow positive. We talked about investing, and basically investing means savings and growing, asset allocation, maximizing your match, knowing what needs to go there. The third topic that we tried to cover is this, is that you need to think about what you need for your insurance and for your family, and you need to do it now. Now, here in the 4th quarter, the big tease was we're going to go goodwill hunting. So, Jeff, what are we going to do when we go goodwill hunting?
Well, the answer is sort of in the statement, goodwill hunting. We're going to talk about estate planning, and most people think about their will when they talk about estate planning. And it's kind of interesting because we've talked throughout the show about different things that we meet with clients and, what are the things that they need the most help with. And one of the things that is overlooked consistently is estate planning. Do you have legal documents in place? Things like a will. Do you have a power of attorney? Do you have healthcare directives? Those legal documents, those basic legal things that we need to have in place. And I think of this as part of protecting your family as well, because when these documents come into play, it's not because things are going great. It's because something bad has happened, something negative has happened, and the family's going to have to step in and act on your behalf. Well, are you going to make that clear and easy for them, or are you just going to leave them to try and deal with it in the midst of grieving? So I think that one of the more loving things you can do here is get your legal documents, get them in place. When it comes to a will, the bottom line is you can decide where your stuff goes when you pass away, or the state can decide where your stuff goes when you pass away. I think most of us would rather that we make that decision and we get it taken care of. So at least having a will is at least the first step in that process.
But when people come in for financial planning, even if they've been with other financial planning firms before, we ask for wills and they say, I don't have one, or they have a really, really old one. And that's the typical answer, no matter what their net worth may be. We also see whenever you read articles about, let's just use the word famous people, they die suddenly of something and they don't have any will or estate plan. Part of this has to do with a mindset, and that mindset is, I don't want to talk about death. I don't want to handle that. What we want to do is try to explain why we think we talk about death, we talk about that possible event happening, we plan for it, and then we go live our life. So imagine this. We just got to design a financial plan that based on this time right now, if something would happen to you tomorrow, what do you want to see happen to your money? That plan has to incorporate legal documents. Legal documents can be a combination of wills and trusts, depending on what you have accumulated over the years, where you live, where you like to live, what kind of real estate you own, things like that. We also add in other documents, power of attorney for financial and also medical and healthcare, advance directives, living will, tying all that in together. The most important thing you need to do is this, and that is understand if something happened tomorrow, what would you want to see happen? This is not something where when you do a will, all of a sudden you get sick. What happens is this. In planning, we plan as if we might die tomorrow, and then we invest like we're going to live forever. The investments are more exciting. They're more fun to talk about. The idea of retirement and doing your dreams are all fun to talk about. But the fundamentals of financial planning is this. Let's get rid of all the worst case scenarios in your financial plan so that when you are going to your financial future, you don't have to have a financial worry of something going wrong that will change it drastically. So good financial planning means having a good will, a will that is done for you. If you have a power of attorney, that needs to be dated after 2012 when Maryland changed its law. Wherever you move to, live in, wherever you're resident of throughout your years, you need to have your power of attorneys done in that state. There are many fundamental pieces, but the key thing is this. You must do your estate planning and get it done now. There's no reason to wait. Get it done now.
That's right. We talked about insurance before, and people don't like to think about insurance because, thinking about dying. And the same applies to your estate planning. But I can't tell you how many times we've come across situations where someone maybe refused to get a power of attorney. They just never did it, never got around to it. And then something happened and they developed dementia. And their spouse now has to act on their behalf, but there's no legal document that allows the spouse to do that. And so they might have to go to court, have the person declared incompetent, and become their guardian. Well, that's a long and difficult process to put someone through. So think about your family, think about the folks you love. Those are the ones that are going to be acting on your behalf. And think about what you can do to protect them and help them. And having these things in place is one of those ways to protect your family. I think that's critical. That's really important, and it's very loving. Another thing to think about, maybe you did a will, like Brian said, a long time ago. You had a power of attorney a long time ago, and now it's time to update it. The kids are grown. Now you've got grandkids, whatever the case may be, life circumstances change, and that can change what you want to have happen. I was meeting with someone the other day, and they want a lot of money to go to charity. And so we talked about using beneficiaries for that you can name someone in the will to do that. But it's important to have things written down and planned out. And there does need to be a coordination between the beneficiaries you have on your IRA accounts, Roth IRA, your insurances, and your will or your trust, whatever those things, whatever documents you do have. They need to be coordinated, and that's where we come in to help you with that coordination and make sure that everything is going the way you want it and not the state.
Because we all know that life changes. Big changes happen in life. I guess for my family, our daughter got married last Saturday, which was exciting, wonderful day. And my daughter started her new life with her husband, and it's a great thing. As the father and a financial planner, my brain goes to, well, it's a new time of life. How should I change my own financial plan? So transitions in life could be when the kids are done college, and all of a sudden you have free cash flow, money that's yours for the first time in many, many years. It could be where a parent might have passed away, and all of a sudden there's an inheritance to deal with, an estate to deal with. Maybe parents are sick and you need to figure out how to handle and help them with their finances. All of these incorporate these legal documents and beneficiaries. To make sure the transitions of life, you have the proper estate flow, which is if you passed away, where would your money go? I just saw one yesterday where they had a CD at a bank and the beneficiary was a husband who passed away like 12 years ago. And so we're going through a process of fixing that. Or in many cases, if you have an account just in one name and no beneficiary, that can create a probate problem down the road. Fundamentals of estate planning is to avoid probate. That allows money to transfer easily and quickly. How do you do that? You do it through titling, you do it through trust, you do it through planning. Financial planning, you've put it off over the years, you've been waiting for a better time. You need to make that change now. What do you do differently this year? Do the fundamentals of planning. Get the worst case scenarios solved. Any other thoughts on estate planning, Jeffrey?
Yeah, we've all heard the stories about someone gets a job right out of college. They're not married, and so they put down a mother or a sister or whatever as a beneficiary. Well, years go by, they've gotten married, they've got kids, but they never changed that beneficiary. You don't want that to happen. You don't want your spouse or your children to be disinherited by your brother or sister or whatever. So even your employee information, make sure you know who the beneficiaries are for those things as well. And then one last thing, I did get to go to the wedding of Brian's daughter, and one of the joys for a cousin was watching Brian talk about his daughter and try not to cry. That was a great joy. But it was a wonderful day. It was a good time, and she did marry a good guy. So that was all good.
Yeah, absolutely. Well, as we come to the close on this show, what are you going to do differently in 2021? There are a lot of things. It should be a different year. There's a lot going on. You need to have your finances settled and organized so that you can handle whatever is brought our way. Financial planning helps you do that. We at Akers Financial Group have a website. That's akersfinancialgroup.com. akersfinancialgroup.com. If you go there, you'll see the tabs up top. You'll see radio and webinar. Those are very important tabs where you can go to the radio and go in there and listen to past shows. You go to webinar, you can watch past videos that we've done last fall. Those videos you can sign up for and get into them and watch things on estate planning, on insurance, and bring it all together. Akers Financial Group is designed to be the financial advisor you need for your family and for yourself. We want you to do something different this year, and that is this. Give Akers Financial a call. We want your retirement years to have as little worry as possible. We want you to have a stress-free retirement, just like you have on most Saturdays, where what you're trying to figure out is where to drink the morning cup of coffee. Your retirement income needs to be taken care of, where you have portfolios designed to last a lifetime. We want you to be able to do that, so give us a call at Akers Financial Group to schedule your free meeting at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave us a voice message, and Susan will call you back on Monday to schedule a phone meeting, virtual Zoom, or an in-person meeting with one of our team of advisors. Start planning for your retirement now. Call 833-946-7384 or go to akersfinancialgroup.com, or you can check us out on Facebook under Akers Financial. Thank you for listening. Thank you very much, Jeff. I'm Brian Akers from Akers Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated and investment advisory services through Kalos Management Incorporated. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Advice given on winning in retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide provide tax and legal services. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services.
Appreciating was a paid program, and the views expressed on this show do not represent the views of WJZ-FM, Entercom Communications, its sponsors, or affiliates.
This is the sound of E. coli splashing around in raw hamburger juice on your cutting board. And it looks like Mom just put the tomatoes and onions on there too. Don't let E. coli mosh with your food. An estimated 3,000 Americans die from a foodborne illness each year. So always separate raw meat from vegetables on 2 cutting boards. Keep your family safe at foodsafety.gov. Brought to you by the USDA, HHS, and the Ad Council.
Broadcasting from the Thompson Creek Window Company studios. High-quality windows at an affordable price. Direct from their local factory. This is WJZ-FM Gainesville, Baltimore. 105.7 The Fan. A radio.com sports station.